Hello and welcome everybody to this brief XTB video on trading strategies for gold. My name is Walid Koudmani, and in this video we're going to be discussing 3 potential strategies and indicators that can be used when trading this very popular and key market. So, gold is becoming increasingly popular among investors who are aware that massive money printing by central banks, which we have seen due to the COVID pandemic, makes the fiat currencies more and more unreliable. There are many ways of investing in gold, and in this presentation I will be talking about 3 of them for investing in gold CFDs. Those will be trend following with moving averages, COT positioning, and seasonality. Let's start with trend following, which is a common one that's used. The interval that is usually used with this can vary anywhere from the hourly interval to the daily, and this is because for traders using leverage, trend following is crucial. Trading against the trend is usually a bad strategy, and with even more so when using leverage. Therefore, most investors would prefer to figure out what the trend is and follow it. There are many ways for doing it, but gold and silver moving averages tend to work very well for these 2 markets for gold and silver. Why is that? Because these markets are often traded in a fairly linear fashion, as opposed to currencies where trends are much less clear. And the idea behind this whole strategy is join the trend at a local low and ride it for as long as possible. Exit the trade when it's clear the trend is broken. So that's the principle. Let's have a look at an example. So for this example, we're going to be using, and for this strategy, we're going to be using 3 different interval moving averages, which are the 50 interval, 75, and 150. Add them to the chart simply by clicking the FX button on the left-hand side of the XStation platform and typing LWMA. In the settings, change the period to 50 and you have the first average. Then do the same for 75 and 150. Change colors for improved visibility. The XStation allows you to customize the visual aspects of your platform fully. On the chart, we can see that the trend is upwards. Prices are moving up and above averages. The theory is that whenever price touches the 50 period average, the trader could interpret it as a buy signal for as long as the price does not decline below the 75 period average. The red boxes on here could be potential stop losses, that are just below this moving average, and they are usually put below the 150 moving average. As the trend continues, the stop loss can be moved up from time to time, and riding the trend long enough will be the stop profit. Basically, exit price will be much higher than the entry price if you're just riding the trend as it were. The second indicator and strategy we might be using is the COT positioning. So in order to access the COT positioning to see if certain things are overbought or oversold, we can just again click the FX on the left hand side of the XStation platform and type COT. We don't change anything in the settings, and we can see the indicator on the bottom part of the screen. If the green line is in the upper gray area, it means the financial speculators are too optimistic on gold and a sell point could be approaching. Conversely, if the line is on the bottom side, on the lower part, this could be interpreted present a buy opportunity because financial speculators are too pessimistic. And so the COT, though, is important that it should be combined with other tools. So it's something that can give you an edge when you're already using other indicators. So if we take a look at this chart, we have a channel there, which are these dotted lines, dashed lines. When the price is at the upper limit of the channel, and so here, and the COT line is overbought, so the COT is in overbought territory, as they say, the green line is in the upper gray area, it could be considered a time to sell. And then we see this followed by a drop. Ideally, one should stick with the trade until the price moves into the lower part of the channel that we have previously assessed. Finally, the final strategy, which can vary on a time frame from anywhere from daily to monthly, we use seasonality. So if we take a look at this chart, we see the indicator that suggests the price could rise, which is this indicator at the very bottom side. So this is the current one, and the green is the projection. We are looking for the opportunity to buy at some good technical level. So this also should be used with something else. It could be the 150-day moving average, this blue line, the horizontal support, this red line. Either or depends on the situation. Traders could consider sticking with the position until the seasonality suggests there is potential left on this end. So these were, thank you very much for sticking with us. This is just was a brief video on some trading strategies for gold. This is a very key and followed market. Hopefully these give you some tips and ideas for your trading. Remember to be careful, and good luck with your trading. Thank you very much.